Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Theta. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right hand corner of your screen. Also, I have two donation links down below. If you want to support Ukraine, you can do so by going over to the official websites I linked down below, and you can donate directly to the funds. So let's get straight into the technical analysis here. For some reason, my exponential moving averages switched up a little bit, so I'm just going to get that fixed real quick here. So the yellow one is supposed to be the 20 EMA, and the red one here is supposed to be the 55 EMA, but for some reason, I can't seem to change it. Like, it doesn't want to change, but whatever. Okay, so we're going to ignore that for now. So as you can see right now, we do have this sideways channel here that I showed you a couple of videos ago, and we are slightly below it. Actually, we are in the channel right now, just above the support of the channel. But as you can see, we did have a fake out below the channel, but we got held up by the support of the falling wedge. Now, as you can see, if I extend these trend lines here, you can see that we do have a very nice falling wedge pattern at our hands over here, and we are getting closer and closer to the apex of the pattern. Now the target from this pattern is going to be at $1.26 because that is where the pattern was created over here. If I start zooming in just so you can see better, as you can see, this is where the touch was, the touch of the resistance of the pattern. Then we came back down for the support. So this is where the pattern was created, $1.26. From where we are right now, that is a nice 15.5% trade. Potentially, we may start breaking out in the coming weeks. October and November are usually very bullish months for crypto. So I would imagine we could get to this target by the beginning of November. Also, you could even go even higher, right? You do have multiple resistance levels here. So you have the $1.28.5 as the 0.5 Fibonacci level, and you have the 0.382 Fibonacci level at $1.37.5. And then you have the 236 Fibonacci level at $1.49.08, basically $1.50. And all of these levels are going to be our targets when we're going to start creating the next leg up in this market here. And like I said, that may happen in November/October, because for the past 2 years we have had bullish November months. That's where we printed our local tops and or local highs, and we went down for a correction from there in December or in January. And potentially we might have the same picture this time around. We may see the last capitulation actually happen sometime in December or January. But regardless, I'm looking for us to start printing higher highs this spring, or not this spring, I should say, well, the coming spring in 2023. From there, I expect us to build up towards the bull market in 2024. So obviously, all depends on how the markets are reacting to events happening around the world, black swan events, any regulation from the US and the Eurozone. Those could affect the markets negatively as well. So just keep that in mind right now. Very good buying prices for Theta. Really nothing really changed drastically. So when we were making the last update, we were sitting here at the support of this pattern, and I told you you had 2 bounces from this support previously, and every time you had a very nice bounce towards the resistance. So right now we could actually enter here and have a nice trade. Lo and behold, we pumped all the way to the 20 EMA, which was a nice 9% trade. And as always, the 20 EMA is a major resistance level you always want to keep an eye on during downtrends, because you get rejected from it all the time. And after that rejection from the 20 EMA, you could have bought back in 5% cheaper. So this was a very, very nice trade for you. The Fibonacci retracement that I have on the chart here is with the high that we printed in August and the low that we printed in June. So right now, as you can see, we are above the 786. We're getting rejected from the golden ratio. So the past couple of days or the past couple of weeks, we have been rejected from the golden ratio, the 0.618 Fibonacci level. And as you all know, that is the most important level in a Fib retracement. So if you start losing the support of the falling wedge, potentially, right, if you come back down here and you start losing the support, I would eyeball 95.5 cents here, which is basically our local low that we printed in June. And if we start losing that, well, then you have more targets to the downside. Your minimal target would be 82 cents or 81.5 cents, which is the 1.272 here. And technically speaking, your technical target is going to be all the way down here at the 1.618. But I don't know if we're going to be able to go all the way down there because that is quite the hefty pullback. So we may just be able to hold the 1.272. All depends on Bitcoin. If we start dropping, right, that's a 40% pullback to the 1.618. Like I said, all depends on Bitcoin. We could start dropping below below $15,000, $14,000. At that point, it is possible for us to come back down here to 66.5 cents. But until then, I would just dollar cost average in here at these support levels, at the support of the falling wedge, at this low here at 95.5 cents or 96 cents. You have great buying opportunities right now because if you go to the weekly chart here and you sort of zoom out and you can see how low you are, right? You're basically above the highs that we were printing in October of 2020. And if you have been buying anywhere in here, then right now is the time to start dollar cost averaging. Now let's switch over to the TradingView chart and see what's going on over there. Moving on to the daily chart on TradingView. So as you can see, we have a bit of a different Fibonacci retracement here. So our swing low is all the way down here in July, the one that we printed here in July, and the swing high is all the way back here in April of 2021. You can actually switch that up and have the low all the way here in September of 2021, but I just like to have the fib stretched out and take the actual all-time high and the local low that we printed last year. So this gives us the 1.618 target, very near the swing high that we printed in October of 2020. And I think that is a great level for us to dollar cost average in if we manage to capitulate and lose this support level, because as you can see right now, we're holding this level as support very nicely here. We're bouncing up every time we drop into this area, but this could all change in an instant if Bitcoin decides to have a very, very, very strong capitulation. Then altcoins will bleed like crazy and we may see large wicks for altcoins, just like we saw here in May last year, just like we saw here in January this year, and just like we saw here in May this year. So yeah, capitulations all over the place. Be on the lookout for that. Have your buy limit orders ready and set to go in advance. Moving over to the daily RSI. So as you can see, we are still within the realms of this symmetrical triangle. And as you can see, we're bouncing off of this support constantly and we're creating higher lows, which is very bullish and which is actually the opposite of what we're doing on the price action. So if I bring out an arrow here, you can see that we're printing lower lows on the price action. However, on the RSI, you're printing higher lows because the corresponding lows are the opposite of what they are here on the price action. Now, this is called a bullish divergence, and this usually happens when there is a potential move to the upside on the horizon because the sellers are selling at lower prices every time and the buyers are buying at lower prices every single time. But this is going to change at some point, and that is when we start seeing the move towards the upside, and that is when I think we may have another run in with this upper resistance trend line. This one over here, you had a test in August and you had the first test in April this year, so potentially we may look for another rejection sometime in October or November, so be on the lookout for that. Obviously the green buy zone here is your entry point, And every time we have been in this zone, we had a nice move towards the upside. And if you are below this zone, that means you are actually very lucky, because this is one of the best times to be buying once you're below the green zone. But generally speaking, even if you're below the index of 30, that is also a very good opportunity for you to dollar cost average into your asset. So that is pretty much it. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon. I'm gonna catch you in the next one. Goodbye and good night.